Hello, and welcome to your AI News Roundup for June 16th, 2026. Today we explore how legal battles are impacting major AI players like Apple and Anthropic. Furthermore, significant opportunities are emerging as AI infrastructure moves beyond traditional data centers. Stay tuned for more deep dives into the future of artificial intelligence. News number 1. Apple shares declined following increased volatility sparked by the ongoing legal dispute involving OpenAI. Apple shares slipped 1.42% today, reflecting heightened market sensitivity stemming from the ongoing legal battle involving OpenAI. This movement occurred amidst post-WWDC volatility in the tech sector. The pressure on Apple's valuation appears directly linked to developments in the litigation, which introduces uncertainty into the broader AI investment landscape. While specific financial figures tied solely to the legal action are pending, the market reaction signals that corporate legal risk is actively impacting technology stock performance. This dynamic highlights how regulatory and legal challenges surrounding foundational models translate into immediate volatility for major tech entities. The situation underscores the ongoing scrutiny placed on the commercialization and governance of advanced AI technologies by investors. News number 2. Cybersecurity executives are urging the administration to relax restrictions on Anthropic's AI models. Cybersecurity executives have publicly advocated for easing regulatory restrictions placed on Anthropic's foundation models, signaling growing concern over current safety protocols in the AI sector. The push comes from a group of industry leaders who argue that overly stringent governmental limitations hinder necessary innovation and deployment strategies. While specific details regarding the nature of the proposed changes are pending, the demand focuses on balancing security concerns with technological advancement. This advocacy highlights an ongoing tension between regulatory bodies and technology developers regarding the speed of AI deployment. Industry observers note that these calls reflect a desire to accelerate the safe integration of advanced models into enterprise environments. The request stems from the belief that relaxed guidelines will allow for more flexible fine-tuning and inference testing, which are critical processes for maintaining robust security standards across large language models. This move positions industry players to push for a clearer framework that supports both security mandates and rapid technological scaling. News number 3. Anthropic is pursuing a potential agreement with the White House regarding a ban on Mythos content. Anthropic has reportedly initiated discussions aimed at striking a deal with the White House concerning the banning of Mythos. This move centers on addressing the deployment and usage policies of large language models within a governmental context. While specific terms of the proposed agreement remain under negotiation, sources indicate Anthropic is positioning itself as a key player in establishing regulatory frameworks for foundation models. The discussion involves defining boundaries for AI content generation and mitigating potential risks associated with misinformation dissemination across public platforms. This initiative reflects an effort by major AI developers to align their operational guidelines with governmental policy objectives concerning digital content safety. Industry observers are watching this negotiation closely, as it signals a potential shift toward formalized regulatory alignment for frontier AI technologies. News number 4. The AI market opportunity is shifting beyond traditional data centers, pointing toward a specific semiconductor stock that is poised for significant growth. A new analysis suggests that the next major wave of AI infrastructure investment is moving away from pure compute capacity and into specialized semiconductor manufacturing capabilities. This shift targets companies focused on advanced chip design and fabrication essential for novel AI architectures rather than just raw data center expansion. Analysts are pointing to a specific, non-Nvidia semiconductor stock as an area ripe for immediate capital deployment, suggesting a massive opportunity driven by this new infrastructure paradigm. The move is predicated on the demand for specialized accelerators needed for distributed inference systems. This repositioning highlights how hardware specialization is now dictating market capitalization growth in the AI sector. News number 5. An AI infrastructure stock has reportedly outperformed Nvidia in market performance following a significant recent deal. A major player in the AI infrastructure sector has seen its stock aggressively outperform Nvidia recently, driven by a recently announced strategic transaction. Sources indicate that this deal involves substantial valuation shifts for both entities within the hardware supply chain. While specific dollar amounts for the deal have not been fully disclosed, market analysis points to a massive realignment of competitive positioning among key semiconductor providers. This move reflects intense competition in securing the necessary compute capacity for foundation model training and inference. The reported transaction is positioned to solidify the infrastructure stock's dominance by leveraging proprietary chip architectures against established market leaders. Industry observers are tracking how this acquisition or partnership will impact future GPU sales and overall market share consolidation across the AI ecosystem. News number 6. Leaked financials suggest OpenAI reported a $39 billion loss last year, prompting a comparative look at its valuation against competitors. Leaked financial data circulating on Stocktwits indicates that the ChatGPT maker reported a loss of $39 billion last year ahead of its planned IPO. This figure is being compared against the financial performance and valuation metrics of key industry players, including Anthropic and SpaceX. The leak positions OpenAI's financial trajectory within the broader context of high-growth private technology firms. The data suggests a significant divergence in how these major entities manage capital expenditure and revenue generation during their respective growth phases. This comparison highlights the intense competitive pressure faced by foundation model developers as they navigate market capitalization alongside aerospace and enterprise AI giants. News number 7. Major global technology players have publicly signaled a strategic decoupling from Nvidia's hardware dominance. Google, Amazon, Microsoft, and Meta have simultaneously announced shifts in their AI infrastructure procurement strategies, moving away from exclusive reliance on Nvidia GPUs for large-scale foundation model training and inference deployments. This coordinated move is reshaping the competitive landscape of high-performance computing in the AI sector. The decision stems from concerns over supply chain vulnerability and escalating procurement costs associated with current GPU architectures. The shift targets optimizing internal infrastructure spending, aiming to leverage alternative accelerator solutions or proprietary chip designs for long-term scalability. Industry analysts view this decoupling as a critical competitive maneuver, accelerating the development of competing silicon ecosystems and intensifying the race for specialized AI hardware outside of the Nvidia monopoly. The move signals a strategic pivot toward mitigating dependency risks while maintaining aggressive AI deployment timelines across their respective platforms. News number 8. Google's Gemini guided learning initiative demonstrated measurable improvements in mathematics scores during a classroom trial in Sierra Leone. In an EdTech Innovation Hub trial, Google implemented its Gemini guided learning platform to enhance mathematical education within classrooms in Sierra Leone. The intervention focused on improving student performance through personalized guidance delivered by the AI system. While specific benchmark scores were not released, the program successfully demonstrated measurable gains in mathematics proficiency among participating students. This deployment highlights the growing application of large foundation models in real-world educational contexts outside traditional academic settings. This initiative positions Gemini as a powerful tool for adaptive learning environments, competing with established digital curriculum providers. The trial underscores the potential for AI to bridge educational disparities by offering tailored instruction at scale. News number 9. Microsoft Copilot AI issued a forecast regarding the future trajectory of Ethereum, predicting significant price volatility over the next 6 months. Microsoft's Copilot AI generated a projection concerning Ethereum's market movement, which 99 Bitcoins has reported as a prediction for the next half year. The forecast details a potential shift in pricing, positioning the asset within an unpredictable range. While the specific parameters of the model's financial inference are not detailed, the report suggests that current market indicators suggest substantial divergence from established historical volatility metrics. This prediction is based on Copilot's analysis of real-time market data and underlying economic signals. The finding highlights how large language models are now being leveraged to generate high-stakes speculative forecasts in the cryptocurrency sector. News number 10. Emerging litigation and regulatory actions are defining the legal landscape for foundation models and AI deployment. New legal challenges are forcing scrutiny on how regulatory bodies classify AI systems, with recent class action suits focusing on data provenance and algorithmic bias across multiple jurisdictions. These cases highlight the ambiguity in current liability frameworks concerning autonomous decision-making by large language models and generative AI platforms. The litigation centers on determining accountability when errors stemming from model fine-tuning lead to financial or reputational harm. For example, a recent settlement involving a major tech firm addressed claims related to biased outcomes in hiring algorithms, setting a precedent for mandatory bias auditing before deployment. Furthermore, regulatory bodies in the EU and US are actively drafting frameworks that mandate transparency regarding training data usage and inference processes. This movement is directly impacting how companies manage operational risks associated with large-scale model deployment. The core debate remains whether liability should fall on the developers of foundation models or the deploying entities. This evolving landscape requires companies to establish robust governance protocols, moving beyond simple compliance to address complex legal exposure related to AI outputs and data handling. News number 11. Major technology conglomerates are escalating their efforts to shape global AI regulatory frameworks following recent legislative shifts. Big tech giants, including Microsoft, Google, and Amazon, have intensified their lobbying campaigns in Brussels and Washington this week, focusing on establishing unified standards for foundation model safety. The push comes as the EU AI Act implementation deadline approaches, prompting these firms to seek harmonization across jurisdictions. Reports indicate that internal legal teams are prioritizing compliance strategies that minimize friction with existing commercial inference operations. The core conflict revolves around balancing innovation velocity against risk mitigation protocols. Competitors are positioning themselves by advocating for tiered regulatory approaches, aiming to steer oversight toward voluntary industry standards rather than strict mandates. This coordinated effort aims to define the parameters of acceptable risk exposure for large-scale model deployment globally. The resulting regulatory landscape is now being defined by these corporate moves and their impact on open-source AI development. News number 12. Deutsche Bank has significantly increased its shipment forecast for humanoid robots. Deutsche Bank has substantially raised its shipment forecast for humanoid robots, signaling increased confidence in the sector's near-term growth trajectory. This adjustment reflects a positive outlook on consumer and enterprise adoption rates, driving demand across various robotic segments. The raise indicates that market projections are moving toward higher sales volumes than previously anticipated by financial institutions monitoring industrial automation trends. This move positions the bank as reflecting optimistic sentiment regarding the commercial viability of advanced robotics hardware. While specific shipment figures were not detailed, the upward revision suggests a re-evaluation of supply chain dynamics and end-user demand in the automation space. This shift is critical for investors assessing capital allocation within the robotics manufacturing ecosystem. News number 13. SpaceX is acquiring AI coding startup Cursor in a $60 billion deal aimed at enterprise expansion. SpaceX is poised to make a massive acquisition of AI coding startup Cursor, valuing the transaction at $60 billion. This deal reflects a significant shift toward integrating advanced AI tools into enterprise workflows. The purchase is driven by an aggressive enterprise push, signaling SpaceX's strategic move to embed sophisticated AI development capabilities across its operational sectors. While specific details on the integration strategy remain proprietary, this acquisition positions Cursor's specialized coding models directly within SpaceX's expansive infrastructure. This move highlights the growing market valuation of specialized foundation models and the intense competitive positioning among aerospace giants seeking deep AI integration for complex engineering tasks. News number 14. Major corporations are facing complex challenges in extracting and processing human intelligence from vast datasets for proprietary AI development. A Bloomberg report details how large enterprises are grappling with the scale and complexity of mining human knowledge to build advanced foundation models. The challenge centers on data quality and bias mitigation across heterogeneous sources, requiring significantly more sophisticated fine-tuning techniques than previously deployed. The analysis indicates that current methods struggle with contextual nuance when scaling inference across global demographic data. This requirement for high-fidelity intelligence mining is driving a shift in corporate AI strategy towards specialized knowledge graphs rather than simple token aggregation. Competitors are currently focusing on optimizing parameter efficiency during the training phase to reduce computational costs associated with deep human intelligence extraction. The reported operational hurdle involves managing conflicting cultural data points, which complicates the alignment process necessary for ethical model deployment. News number 15. A new federal bill has been introduced aimed at developing mechanisms to track terrorist organizations that utilize artificial intelligence. Homeland Security today has introduced a significant legislative proposal targeting the intersection of AI technology and counterterrorism efforts. The newly introduced bill seeks to establish legal frameworks for monitoring and tracking entities and networks that employ sophisticated machine learning models for planning or executing hostile actions. The legislation focuses on defining parameters for AI usage and threat assessment, establishing protocols for data sharing between intelligence agencies, and mandating specific reporting requirements for platforms involved in AI-driven recruitment or operational planning. While the bill itself does not specify immediate enforcement dates, it outlines a mandate for federal agencies to develop detection algorithms capable of identifying AI-facilitated threats. This move represents an attempt to regulate the deployment of foundation models within security contexts, addressing the dual-use nature of advanced AI systems. Industry observers are watching closely as this legislation moves through Congress to determine how existing surveillance laws will adapt to the speed and complexity of AI threat vectors. News number 16. The United Arab Emirates has established a federal authority to govern artificial intelligence and data regulation across the nation. The UAE has officially created a federal authority for artificial intelligence and data, according to reporting by Morgan Lewis. This move establishes a centralized framework designed to oversee AI development and data governance within the emirate. While the initial announcement details the structural establishment of the authority, it signals a strategic push to integrate advanced technology into national policy frameworks. This new federal body is positioned to set standards for data privacy and ethical deployment of machine learning systems. Industry analysts view this as a significant step towards standardizing regulatory compliance, potentially influencing how regional foundation models are developed and deployed across the MENA region. The authority's mandate includes ensuring responsible practices related to large-scale data processing and AI innovation within the country's digital economy. News number 17. China is intensifying its strategy to integrate artificial intelligence into national security and military objectives. Beijing is accelerating its drive to position AI as a core component of global geopolitical power, focusing heavily on the militarization of AI systems. This strategic focus involves massive state investment aimed at developing advanced foundation models capable of autonomous decision-making in defense applications. The push centers on rapidly scaling up computational resources for advanced inference capabilities across various strategic sectors. This accelerated development is driven by a competitive imperative to establish technological dominance, positioning AI as the critical determinant of future global power status. Competitors are responding by intensifying their own domestic research and deployment efforts, highlighting an escalating technological arms race between major powers. The emphasis is shifting from pure commercial application towards securing operational advantages through AI-driven systems in defense and strategic planning. News number 18. Salesforce has acquired agentic AI firm Fin for $3.6 billion. Salesforce finalized the acquisition of agentic AI firm Fin, a move that signals a significant push into autonomous workflow and decision-making systems within the enterprise space. The deal valued Fin at $3.6 billion, integrating its specialized capabilities directly into Salesforce's platform architecture. This strategic purchase aims to accelerate the development and deployment of advanced AI agents capable of handling complex business processes end-to-end. Fin specializes in building autonomous workflows that utilize large language models for sophisticated task execution and multi-step reasoning. By acquiring Fin, Salesforce is bolstering its enterprise offering with proprietary agentic technologies designed to enhance customer relationship management and internal operational efficiency. This integration positions Salesforce to rapidly scale AI capabilities beyond traditional CRM functions, focusing heavily on advanced inference and fine-tuning specific to business logic. The transaction underscores the market shift toward integrating specialized autonomous AI tools directly into core enterprise software solutions. News number 19. DeepSeek has officially secured the title of China's most valuable AI startup following a major fundraising round. The Chinese AI landscape has shifted as DeepSeek reported achieving a valuation of $7.4 billion after successfully closing its latest funding round. This places the company in the top tier of AI enterprises within the region, signaling significant investor confidence in the domestic foundation model sector. The capital injection underscores the growing market appetite for localized large language models and advanced generative AI infrastructure in China. This milestone highlights DeepSeek's dominance in developing sophisticated models capable of high-performance inference and fine-tuning for regional applications. The substantial valuation reflects the ongoing competitive moves among major tech players vying for leadership in the rapidly evolving Gen AI space across Asia. News number 20. The Washington Examiner argues that the United States must adopt the competitive infrastructure model pioneered by SpaceX to secure leadership in the global artificial intelligence race. The piece contends that achieving dominance in the AI landscape requires not just superior foundation models, but a focus on scalable infrastructure and rapid iteration. The argument suggests that mirroring SpaceX's philosophy, prioritizing reusable systems and end-to-end engineering efficiency, is essential for accelerating AI development. This approach emphasizes minimizing friction across data pipelines and inference operations to maximize computational output. The report positions this strategy as a necessary competitive move, suggesting that infrastructural advantage will dictate future market share among global AI players. Following the SpaceX model implies an emphasis on optimizing hardware deployment and reducing operational costs for training large-scale models. This shift demands greater investment in specialized compute clusters and streamlined development pipelines to outpace rivals in releasing advanced models and fine-tuning techniques. News number 21. The intense competition in the AI chip sector has propelled semiconductor equipment sales to a record $36.55 billion. The race for advanced AI processing power is fueling massive demand across the semiconductor supply chain. Sales of specialized equipment, crucial for manufacturing high-performance chips, have hit a new peak of $36.55 billion. This surge reflects the escalating need for sophisticated fabrication tools required to produce the cutting-edge hardware powering foundation models and complex inference operations. The competition among major AI players is directly translating into higher capital expenditure across the industry. Companies are aggressively investing in advanced lithography and deposition technologies to scale production capacity, driving up demand for specialized equipment from key suppliers. This trend underscores the critical link between computational demands and the physical infrastructure required for large-scale AI deployment. News number 22. Salesforce has committed $3.6 billion to developing AI agents, signaling a massive shift in enterprise business automation strategy. Salesforce announced today its $3.6 billion investment dedicated to deploying AI agents across its platform, marking a significant allocation toward autonomous workflow execution. This move positions the company to redefine how large enterprises leverage generative AI for operational efficiency and customer interaction. The initiative focuses on building sophisticated agents capable of executing complex, multi-step business processes autonomously. This commitment follows intense competitive moves from rivals like Microsoft and Amazon, who are also heavily investing in agentic frameworks to capture market share in enterprise AI solutions. The strategy centers on leveraging fine-tuning techniques for proprietary data to ensure high-fidelity inference within client environments. This bet underscores the industry pivot toward deploying sophisticated AI agents not just for content generation, but for tangible, end-to-end business automation. News number 23. China is pouring $295 billion into building new data centers and exploring renewable and nuclear energy sources to power this expansion. China is executing a massive investment of $295 billion aimed at expanding its AI infrastructure by constructing next-generation data centers. The focus of this monumental build-out is integrating sustainable energy solutions, specifically leveraging renewable and nuclear power to mitigate the immense energy demands of these facilities. This strategic pivot aims to establish a more sustainable growth model for the rapidly expanding AI sector. This move addresses the high carbon footprint associated with large-scale computational infrastructure development. Industry observers are watching how this deployment impacts global energy logistics and sets a precedent for future data center construction standards worldwide. News number 24. ARM Holdings is positioning its CPU architecture as an indispensable component in the rapidly expanding AI infrastructure market. ARM Holdings, the licensor of core CPU designs, is seeing its architectural dominance solidify as data center demand accelerates. The shift involves leveraging ARM's scalable instruction set architecture to build specialized accelerators and compute clusters essential for large foundation models. This increased dependency stems from the need for high-efficiency inference processing across global cloud providers. Analysts point to ARM's continued licensing revenue, which has seen significant growth in the AI segment, underscoring its strategic value over competitors. The compounder role is driven by demand for energy-efficient silicon capable of handling massive parallel processing required for complex fine-tuning operations. This competitive positioning directly impacts the supply chain dynamics between chip designers and hyperscalers seeking optimized performance per watt. News number 25. The Vatican has issued an encyclical detailing the risks associated with artificial intelligence. The Vatican's recent encyclical addresses the inherent dangers and ethical considerations surrounding artificial intelligence development across the globe, focusing on moral and societal implications rather than technical specifications. Released in connection with the Latino America 21 event, the document outlines specific concerns regarding algorithmic bias, autonomous decision-making systems, and the potential for misuse of advanced machine learning capabilities. The encyclical positions a framework for assessing the risks inherent in deploying powerful foundation models. It calls for regulatory discussions concerning data governance and transparency to mitigate systemic risks associated with widespread AI deployment. This move adds a unique ethical layer to the ongoing technical race among major tech players, contrasting sharply with purely commercial or competitive positioning. The document emphasizes that technological innovation must be balanced by robust moral oversight as these systems transition from research into practical applications. News number 26. European policymakers are pushing for a distinct AI sovereignty strategy to counter perceived American dominance in the rapidly evolving technology landscape. The call for autonomy centers on mitigating reliance on US-centric foundation models and ensuring European data governance remains paramount. This strategic push is driven by concerns over regulatory divergence and the potential impact of extraterritorial tech policies on European enterprises. Analysts emphasize that establishing independent AI infrastructure, including sovereign compute capabilities, is crucial for maintaining competitive advantage in the global market. The proposed framework aims to harmonize data standards while allowing member states flexibility in implementing AI regulations, positioning Europe as a distinct geopolitical player rather than merely an adopter of American technological frameworks. This move reflects a competitive response to the concentration of AI research and deployment within North America. News number 27. A brief White House deadline triggered a major competitive conflict among Silicon Valley AI firms. A 90-minute deadline issued by the White House served as the catalyst for an intense competition among major AI developers in Silicon Valley. The event forced competing teams to rapidly optimize their foundation models and inference pipelines under extreme time constraints. Reports indicate that this high-stakes scenario highlighted divergent strategies regarding model deployment and fine-tuning protocols. This competitive move is aimed at establishing superiority in real-time processing capabilities. Industry observers are now analyzing how these constraints will reshape the pace of proprietary model development and API pricing structures moving forward. News number 28. France is allocating €655 million to establish a common chatbot system across all state services. France has announced a significant investment of €655 million aimed at deploying a unified chatbot infrastructure for all government services. This initiative focuses on creating a centralized digital interface for citizens interacting with public administration systems. The goal is to standardize and streamline service delivery by implementing a single, common chatbot platform across various state entities. This move represents a major push in governmental AI integration, focusing on operationalizing foundation models within the public sector framework. The project seeks to enhance efficiency and consistency in how citizens access and interact with official services through this centralized conversational AI system. News number 29. The World Economic Forum has released a report detailing strategies for Asia-Pacific regions to convert AI innovation into sustainable economic growth. The report outlines pathways for leveraging localized AI development to drive regional prosperity. It focuses on actionable frameworks for governments and private sectors to maximize the ROI of AI deployment across the APAC economies. Key recommendations center on infrastructure investment, talent development, and establishing regulatory sandboxes to foster responsible AI scaling. Specifically, the analysis highlights how targeted public-private partnerships can accelerate the transition from foundational model research into commercially viable applications. The report emphasizes the need for cross-border data governance standards to facilitate the movement of AI knowledge and capital across the region. This strategic approach aims to mitigate risks associated with rapid technological adoption while maximizing economic impact. The underlying focus is on ensuring that innovation translates directly into tangible, long-term sustainable economic outcomes for the continent. News number 30. The World Economic Forum outlines strategies for leveraging agentic AI to drive economic growth across the African continent. The report details how deploying agentic systems can unlock vast economic potential by automating complex, multi-step tasks across sectors like finance and agriculture. It identifies specific use cases where intelligent agents can improve operational efficiency in emerging markets through optimized supply chains and personalized services. The analysis focuses on the infrastructure gap and the necessity of localized data fine-tuning to ensure these solutions are contextually relevant. The WEF suggests that strategic investment in agentic AI frameworks, rather than mere foundational model adoption, is crucial for scaling enterprise solutions across diverse African economies. This approach emphasizes building localized operational layers to manage complex inference tasks efficiently. Furthermore, the report highlights the need for policy alignment and digital literacy initiatives to prepare the workforce for these AI-driven roles. This move positions agentic AI not just as a technological upgrade, but as a critical mechanism for bridging infrastructural deficits and fostering sustainable growth in the region. Thank you for watching today's AI news. Please subscribe and hit the like button for more updates. Join us tomorrow for the latest developments in the AI world.